What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Wednesday, November the 3rd. As always, guys, nothing that is discussed on the videos is financial advice. It is simply financial education. I simply want to try to teach people you don't have to slave in those 9 to 5s. You can easily hustle 24/7 and still accomplish all those financial goals you have set for yourself. But again, you're only going to get out whatever you choose to put in, as in anything in life, right? But let's get into it to conserve time. So I was scouring, number one, the earnings reports to kind of check out what I'll be watching tomorrow. As you see, I do have circled HiMax. If you haven't seen that video, definitely recommend it. It'll teach you a lot about that company. I am really bullish on semis, and they have not proven to disappoint this week. Pretty much all semis have beat on earnings. I'll also be watching Viacom CBS. If you remember, in the spring, early summer, they had this massive rundown. If you didn't read about it, please do. It's pretty interesting what happens to them. And then for Friday, obviously, you see DraftKings, right? Now, full transparency, I have no affiliation to DraftKings other than the fact that I like their app and I use their app, right? I am a sports bettor, unfortunately, a degenerate, if you will. I like betting on NFL games, just a preference of mine. I've used a couple of different apps, never used Golden Nugget Gaming, but I have used Penn, I've used FanDuel, and I've used DraftKings. Of the three, again, this is my opinion, I have the preference of using DraftKings, right? That's just my preference. That's just my opinion. You don't have to treat that as fact. But let's take a look at the chart. So if you take a look at DraftKings specifically for this year, you see that they did have this nice massive run up at the start of the year, peaking off essentially somewhere in the 70s. What is that, March? Before it did that massive rundown with the correction we had through May. It topped or bottomed out essentially somewhere in the 40s before it started then building back up, consolidating in this middle channel here, these two middle channels. Peaked again September before we started doing this downward trend, right? You see this pink line, it respected this upward trend from that bottom, essentially all the way through September, broke that trend, and now we started this downward trend, right? Which we are relatively respecting through now. However, let's take a moment to think about a couple things, right? So in the summer, you don't really have a lot of sports besides maybe MLB, right? Maybe some soccer, about it. But what starts in September? The NFL. How popular is the NFL? Well, I'd say it's pretty popular. I'd say it's a global sport. You know, some of those companies or some of those teams are worth billions and billions of dollars just in marketing alone. So that's a lot of money that gets thrown around in the NFL. Just think, do you logically see or understand why a sports betting app that has a big portion of the gains in betting on NFL games makes sense that it would run down? To me, that answer is no. That does not make sense. This chart does not make sense to me. I understand that the MACD's in a selling period. Cool, whatever. I see that the RSI is sitting closer to oversold. Cool, get it. Yeah, the ATR is giving you essentially a $4 swing. Cool. But again, this massive rundown once the NFL starts, that doesn't make sense. That to me would be the opposite. It should be generating more revenue or getting more hype, more and more bullish, right? So how can we attest to this, right? Well, obviously you would look at their competitors. One of the things you can do in Thinkorswim, if you have it, there is a section for news. One of the stories that I saw was reported today at 10:48 a.m. It says, and I quote, what was the line? Where is it? Oh, FanDuel partner, Flutter Entertainment, OTC, right? PDYPY, reported third quarter revenue Tuesday that was up 12% year over year. The highlight of the company may have been its US segment, which saw revenue growth of 85% year over year. Flutter reported 42% market share for the online sports betting in the US in the third quarter. So they only have 42%, right? 42% of online sports betting. That's less than half. Yet they produced an 85% year over year return on revenue. Insane. The company reported it had 1.9 million average monthly players in the month of September alone. So that to me is a pretty bullish indication. As I mentioned, this is my opinion. Once again, I do believe that DraftKings is a much better app than FanDuel. I use both. I have both. Specifically this here at the top. Well, you can't see it, but I have a little icon for FanDuel that is kind of on my computer. I haven't been able to get it off, but it's there, right? Proof that I use it. In relation to that, or aside from that, This rundown doesn't make sense on the chart, so that made me, number one, look. Number two, I was already scouring the alerts, and I saw this alert for DraftKings, right? You see the $57 call for the November 19th, 2021 expiration. You see that it is bullish. You see that the volume is spiking over the open interest, and you see that the underlying is at 47.45. Well, when we click on the alert, we can actually look at a couple more little different nuggets of information. Number one, I want to set it to 1 minute. We want to add the volume, if it wants to. Come on, Mac. There you go. Volume. I want to add the strike. And I want to add the underlying. And we'll go back and set it to the minute. I don't know why my Mac does that. Here we go. This is what I wanted you to see. So specifically, when you add the volume, add the strike, and add the underlying, it gives you this, right? This is pretty interesting because, number one, the green line at the top is the underlying price of DraftKings. Number two, the blue line in the middle, or teal line, is the ask price of the contract in question. So this is for the $57 call for November 19th. As you see, both vary throughout the point of the day. This is essentially for the morning leading up to when this alerted, which this did alert at 10:03 a.m. So the end would be 10:03, right? This line where it says alerted. Now look, pay attention to the yellow line. This is volume. Nothing, 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 and all of a sudden, boom, you see a massive spike in volume. Why is this important, or why am I pointing this out? It's important because pay attention to when it alerted where the ask price was at. You could have essentially got this at a very low point of $30 for the contract if you had bought when the alert came in. That's another benefit people don't take into account about unusual whales. It's not only giving you unusual things that it sees in option chains, it's also trying to give you the best possible price you can pick up the option for. It's a key takeaway when you're trying to be profitable, especially sometimes in options, because your swings aren't that great. So you're trying to make sure you got to get yourself the best possible price. But again, I just wanted to touch on that. I thought that was pretty cool. I've never seen that on a video, so I wanted to make sure I did highlight that for real specifically. But excuse me. As you see, we always have the 10 biggest option trades recently, right? All bullish, very interesting. This is very interesting to me. This piece is something I always look at. If you see my other videos, you always see me reference this. This is the historical volume and open interest over the last 10-day period. So open interest has been pretty steady, over 1,000. You see that the volume was relatively low, or nonchalant, if you will, even to the point of being ridiculously low. And then all of a sudden today, boom, 6,000. That is a very interesting, unusual spike in volume, right? That should, make you kind of look at it. Well, at this point, I don't need to see any more in this. I can simply go to the flow and I can start pulling flow. Obviously, we're going to try to conserve time. I want to try to keep the video short. The alert was for the 19th. Today is the 3rd. So that's 16 days out. As you see, date to expiration range, I've already preset that to 16 days out. I only want to see 16 days out. Obviously, that's when the alert triggered. So I'm pretty sure you're going to see some pretty large buys before that or leading up to that expiration date, right? I preset to 25,000 and I have nothing else turned on. Let's take a look at the chart. And what do we see? Obviously, you see this massive spike for November the 5th, but remember, the alert was for the 19th. The 19th's back here. And you see that the strike that is populating the most is 50. Well, we're sitting at 47. That's still a $3 swing. That makes this extremely bullish. Now, what else can we do at that point, right? Well, I normally like to go and pull out of the money only, right? Because I want to see speculation. Like, what are people speculating the stock will do? And again, what you do see is confirmation of a bullish trend. Now you have a bigger separation on the 19th, and now you see some other strikes start to stand out. The 50, the 52, and the 55. 55, right. So at that point, I'm pretty confident that this is going to be pretty bullish. Aside from that, I know they have earnings on Friday. We can see that right here. I believe it's before. Yeah, before open, DraftKings will report earnings. So that in itself is pretty relatively bullish to me. If, in case you needed any other confirmation, I have another little trick, right? There is something called Lucid Tracking, right? That you can also follow ARK Invest, BlackRock, ETFs. One of their positions that they have in ARK is DraftKings. Well, take a look at this. The gray line is the price of DraftKings. As their price has been fluctuating, dropping, they haven't necessarily been buying. This massive drop, you see that the pink line and the orange line is being the most important. That's the aggregate of all the other ETFs. Stayed relatively flat up until today. Massive spike to the top side. They were sitting yesterday at 16,113,000 shares, and then you see today all of a sudden 16,800,000 shares. So they increased 700,000 shares right before earnings with that little spike, going along consolidating with this other dip in price. That's another bullish sign if you needed one. I necessarily didn't need it. It's just an added bonus for some of you that may be out there speculating or wondering, well, that doesn't necessarily mean anything. But if just in case you needed one more, I got you too. So we go to Nasdaq. As always, we can go in and look at analyst research. As you can see, there are plenty of excuse me, investment firms that are essentially researching and analyzing DraftKings. It does have a buy rating. As you can see the names here. Take a look at their targets though. 41 on the low, 68 as an average, 105 at the high. Again, please keep it into account. We're sitting at 46. So we're essentially already sitting at that low, giving you bullish potential to the top side. Just imagine some really, really smashing earnings. Let's say that they do have more than 50% of that market share and they just destroy earnings. What do you see this chart doing? Well, for me, in my opinion, I would see this running. Now, can I predict the future? No. Do I know what their earnings are? No. Am I 100% sure that they're the #1 preferred app? No. Again, it's speculation. That's part of the fun in the market, right? You're trying to make the best decision you can, or best financial decision you can, weighing risk for yourself, what you're comfortable with, right? And your potential earnings or gains. So going into the options chain to finish off this video, again, we saw that this week obviously ends on the 5th for earnings. We can go in the option chain. We can already see that it's bullish. Look at this, 16,000 volume spike, right? Look at the puts. Anywhere near that? Not even close. Obviously, it's going to be way more bullish. That's just my opinion. Again, don't treat it as fact. Remember, the alert was for the 19th, and here we go. Excuse me. 57 was the strike that alerted on DraftKings or on Unusual Whales, and as you see, this is the 6,000 volume spike on 1,499 open interest. This contract you can still pick up tomorrow morning as long as we don't have a massive spike in pre-market, and you will pay anywhere from $35 to $36. In my opinion, just slap the ass. Pay the $36 if you're interested in it. Me personally, as you've seen from my videos, I don't like to play options less than 0.50 delta. I would be more of a player, and I will be a player specifically, just to be exact, at this 0.52 or otherwise this $47 strike. Again, that's just my preference. You don't have to treat anything I say as fact. I'm just a guy on YouTube trying to give people financial education. But me preferably, I'd rather make $50 for every dollar DraftKings does happen to run up. And I also want to give myself at least a 52% chance of being profitable. But as always, guys, I think you guys get the point. If for any reason you guys have a question, leave it down in the comments below. I'll be sure to get to you. Or as always, you can hit me up on Twitter or IG. Until then, guys, I'll catch you in the next one.